Hi everyone. As a part of the final assignment for the Equity Research Initiative, we'll provide you with the stock picks report of Facebook. Disclaimer: the values generated are on our own, and we have no bearing or responsibility if these are wrong or misinterprets Facebook. As you know, the company is Facebook, and it's a social networking service. You could find it as FB at Nasdaq Stock Exchange. So here are the key statistics about Facebook's shares. The current price stands around at 113.03, and you can also see the year low and year high. The beta value is around 0.79, which suggests that the stocks are reasonably stable and are not volatile. This is a summary of a valuation report in which you can see that the current price of Facebook is around 113.03, and the intrinsic value that we have predicted is 234.49. So we would recommend you to buy the stock. So now let's have a look at the fundamental analysis. We'll start off with Porter's 5 force analysis. First, we would see the bargaining power of the buyers. It's moderate because you know that the switching costs are low. People could always switch from one social networking site to another, and it's always though Facebook itself is not facing any danger. It's in its components like WhatsApp is facing stiff competition. Next, we are going to the bargaining power of suppliers. It's pretty low as there are only a few reputed suppliers for supplying this large range of hardware and software. Next, the threat from substitutes, it's moderate again, since there are, because of the low switching cost, people could always move to alternatives of Facebook. Moving on to threat from new entrants, since there are very low barriers for new companies to come in, like they could always post threats, but they would need to spend a lot of their resources for marketing and gaining brand recognition. Regarding rivalry among existing firms, it's pretty high. Google Plus and Twitter are becoming famous every day, and they could reduce the number of active users on Facebook. Now, next, moving on to SWOT analysis, we'll discuss the strengths, weaknesses, opportunities, and threats about Facebook. The main strength is its huge number of active users, and it gives a very good user experience, and it's rated pretty high in that. And as far as the weaknesses are concerned, its advertisement campaigns are pretty poor. It hampers the user experience, and also it has a big click-through rate for the advertisements. About the opportunities, it is slowly moving into China, and it could also look for more sources of revenue.
Next, we move on to the ratio analysis. We start off the EBITDA margin. The EBITDA margin for Facebook is much better than its competitors. This is the same case with the net profit margin too, and which shows that Facebook is at a really good position right now. When it comes to the return on assets, it shows us how much profit can be generated for each dollar of asset that is invested. And even in this, Facebook has a good healthy 7.46%. A high return on equity can be caused due to the company taking excessive leverage, which is bad for the shareholders in the long run. Now, if you see the return on equity values for Facebook, it's at an optimum level. The current ratio of 2 and above is usually considered safe. Facebook has a very good current ratio of 11.25. Which means it can pay back its liabilities compared to its competitors. The price to earnings ratio is a measure of the potential for growth. Facebook has a huge price to earnings ratio as it is an immensely popular and user-friendly service. Also, it doesn't face any real competition from other companies. When it comes to the asset turnover, it shows how much sales can be generated for each dollar of assets that is invested. It's also a measure of good performance. In this ratio, the Facebook has an average value among other companies. Price to sales ratio is quite high for Facebook compared to its competitors. And the debt to equity ratio is very low, which means Facebook is associated with low risk, and it also means that it never uses debt as a means to finance its growth. This is a table showing how Facebook has performed over the years. From this, we infer that the EBITDA margin and net profit margin are increasing over the past 3 years, which is quite a good sign, but they have to improve upon their return on assets, return on equity, asset turnover, P/B ratio, and current ratio. The P/B ratio has almost remained the same, and the debt to equity ratio is pretty small, which are good signs of growth. The valuation of the company was done using a relative valuation method. After reading a lot of financial reports, we found that the growth rate of the revenue over the next 4 years can be expected to be quite high. In fact, it could even increase each year. This is due to the increase in revenue from ads for Messenger, Instagram, and also due to the acquisition of Oculus Rift, which is predicted to be a $30 billion industry by 2020. At the current market price of $130.5, we feel it's a strong buy call from our side. In fact, the share price is expected to double in the upcoming years. So, assuming that the stock will eventually move towards its intrinsic value, we would recommend you to buy the stock. Thank you.